70% of American households bought something from this company last month. Pause. Not Amazon, not Apple, not Tesla. A 187-year-old consumer goods giant that most investors scroll right past because it's boring, and that's exactly why it might be the smartest place to put $1,000 right now. Here's what I'm going to show you. The one consumer stock built to survive recessions, compound wealth for decades, and pay you growing dividends while you sleep. No speculation, no prayer, just math. Let's get into it. The company is Procter and Gamble, ticker symbol PG, and before you click away thinking this is your grandfather's investment, stop. Pause. That's precisely the point. P&G owns Tide, Gillette, Pampers, Crest, Bounty, Charmin, Oral-B, and about 50 other brands you've used this week without thinking. That's not brand loyalty, that's brand addiction. And addiction is the most powerful moat in capitalism. Think about it. When inflation spiked 40% over the past 3 years, did people stop buying toothpaste? Did parents stop buying diapers? Did everyone suddenly stop doing laundry? Pause. No, they complained about prices and kept buying. That's pricing power. That's the moat. Now here's where it gets interesting. P&G operates in 180 countries. 5 billion consumers interact with their products daily, not yearly. Daily. That kind of distribution network took almost 2 centuries to build. No startup, no disruptor, no SPAC is replicating that ever. But Brian, you're thinking it's a slow grower. Where's the excitement? Wrong question. Pause. The right question is, where's the safety? And the answer is everywhere in this stock. Let me show you what happens when markets crash. In 2008, when the S&P 500 collapsed 57%, P&G dropped 30% and recovered in half the time. In 2020, when the world literally shut down, P&G was classified as essential. Revenue grew, dividends grew. The stock hit new highs within months. You don't buy P&G to get rich quick. You buy it to stay rich forever. Now let's talk dividends because this is where boring becomes beautiful. Procter & Gamble has increased its dividend for 68 consecutive years. Pause, let that sink in. 68 years through Vietnam, through Watergate, through Black Monday, through the dot-com crash, through 2008, through COVID, through every crisis you can name, they raised the dividend. That makes P&G a dividend king. There are only 54 companies in the entire market with a 50-plus year dividend growth streak. P&G is royalty among royalty. The current yield sits around 2.4%. Not sexy on paper, but here's the math that matters. If you invest $1,000 today and P&G continues its historical dividend growth rate of 6% annually, in 20 years you're collecting over $77 per year from that original investment. In 30 years, it's over $138. That's a 13.8% yield on your original cost. Pause from a company that sells soap and razors, and that's before share price appreciation. P&G has averaged about 10% total annual returns over the past decade. $1,000 invested 10 years ago would be worth roughly $2,600 today, with dividends reinvested. But here's the pattern interrupt you need. Pause. Everyone's chasing the next Nvidia, the next Tesla, the next 100-bagger, and statistically, almost none of them will find it. 90% of individual stock pickers underperform the market. Why? Because they're swinging for home runs instead of hitting consistent singles. P&G is the single that turns into a triple over time. It's the investment that lets you sleep at night. It's the position that your grandchildren will thank you for. Now, is it perfect? No, growth is slow, typically 3 to 5% revenue growth annually. That's the trade-off for stability. Private label competition from store brands is real, though P&G's premium positioning has held strong, and at current valuations, the stock isn't cheap. It trades around 25 times earnings, but here's my take. Pause. In a market full of landmines, P&G is a bunker. In a world of broken promises, 68 years of dividend increases is a contract. And when the next recession hits, not if, when, you'll want to own the company that sells products people literally cannot stop buying. $1,000, one stock, a lifetime of compounding. That's the consumer play. If this breakdown helped you see investing differently, hit subscribe. I drop data-driven analysis like this every week. No hype, no fluff, just the stocks that actually build wealth. Subscribe now, and I'll see you in the next one.